Thank you, and thank you for tuning in. You're watching Tracking Trends with me, Nikunj Dalmia. Over the next 30 minutes on ET Now, it's all about IT. TCS and Infosys, well, they will come out with their numbers today. Hello to Q3 earnings season. Just a coincidence that both the heavyweights are coming out with numbers today. We'll discuss that. This one sector expectations are low. This one sector expectations are limited. This one sector where short built-up is there. So are we in a case where everyone's sold IT? And can IT stocks really bounce back? Now, before we do that, here's a look at the market headlines this Thursday afternoon and what we're tracking for you in terms of market big picture and in terms of the market trajectory. Nifty holds above 21,600. Broader indices outperform. So, markets are one step forward, one step back, one step forward, one step back. I can literally do that. Imagine if I'm going up like this and coming back like this, I'm standing in the same space. That's what's happening to Nifty. One step up, one step back. Now, let's look at IT. Now, what we've done is that we've looked at the top four company, the trio, the top four or the famous four of Indian IT sector: Infosys, TCS, Wipro, and HCL Tech. If you look at those top four companies, there is a very neat scorecard, and then we'll first analyze the scorecard for you. That's cues from Dalal Street. But if you move on to the scorecard of IT earnings and the track record for them in terms of the hits and the misses, here's the score line for last 8 quarters. Which are the IT companies which have managed to beat estimates, where numbers have been in line with estimates, and where numbers actually have missed the mark. The first one is actually Infosys. In Infosys case, in last 8 quarters, they've missed 5 times, in line once, and beaten by 5 times. So Infosys has really been a string of disappointment. Some not so good numbers and some really bad numbers where in middle of the year they were forced to cut their guidance. TCS, 4 times they've missed the guidance, 2 times their numbers have been in line, and twice they managed to beat the estimates. And remember, we are talking about 8 quarters here, guys, which means I'm taking the clock back to the golden sugar rush period for IT sector where the COVID hangover actually was there. And despite that, if the numbers are like that, that just tells you that how strong the business contraction has been. Wipro, the picture is not appealing at all actually. Wipro has missed 6 out of 8 quarters. They managed to beat only once. HCL Tech slightly better. Well, they managed to beat, I would say 3 out of, 2 quarters. My mobile phone is just ringing, so I'm just going to, switch it off. My apologies that I'm on air right now. 3 out of 3 quarters they managed to miss, in line twice, and the beat essentially has been only thrice. So that's the scorecard, how numbers have stacked up in last 8 quarters. IT companies have disappointed more and they've surprised less. And what does that mean for the sector per se? So what essentially are markets hoping to hear from IT managements today? A quick look at TCS. Numbers are today. Don't expect Q3 to be a strong quarter. Nobody's expecting Q3 to be a strong quarter. Infosys, everybody is expecting the guidance cut to 1.2% versus 1 to about 3%. HCL Tech organic growth guidance cut, and with LT Mindtree, that's mid cap. But if you just focus on the 3 here, everybody is expecting that there would be a guidance cut. Now that's the consensus view. Kunal will just walk in and then we'll talk about the IT stocks positioning. If there is no guidance cut, and if numbers are slightly better, could this really lead to a bout of short covering in IT? Kunal, nobody is expecting anything. Like they कहते हैं ना कि expectation कम रखो.
Correct.
When your expectations are low, whatever happens, it will be a bonus. And with IT, we've reached that stage where expectations are not there. Guidance cut, nobody is expecting anything flowery. So if the numbers are even worse than what everybody is expecting,
Correct.
Could the stocks fall more? First, let's get that out of the way.
So there are 2 metrics to look out for, and you'll be amazed with the data, Nikunj, because the IVs. So
What is IV?
Implied volatility, implied vols. This becomes a very essential part of trading pre-results.
Why is that?
So because there is an expectation that maybe the stock will open with a 5% gap up or gap down, and then the IVs tend to move up higher just before every event which happens. Now, interestingly, for Infosys, the IVs are at 28.5, which is one of the highest IVs so far in the 3 or 4 large cap IT names, which indicates that the outcome post results for Infosys would not be curtailed towards 2 or 3 percentage points. It has to be at least a magnitude of 5% plus minus range for the stock.
So Kunal is saying that tomorrow morning, ladies and gentlemen, It's a 5% move coming on Infosys.
Yes.
Okay. On a scale of 1 to 10, your analysis is saying will it be up move or a down move?
That is very difficult to sense, Nikunj, because the second point of data indicates that Infosys is not amongst the extreme best performers as well as not the worst performers. Now the most simplest way to look out for is from the life highs, how have the top 4 large cap IT names behaved? Now Wipro, apparently from the life high, that's in 2021, around 730 levels, is still down 40% approximately. And from the 2-year lows, which is 2022, it is up 28%. Which means this number is extremely heavy, and that's why this stock is one of the major IT large cap names where there is extreme amount of short positions. TCS is relatively stronger because it's only 7% down from the lifetime highs. Infosys is around 20%. So it's not as if that there is extreme amount of panic on the stock or extreme amount of positions. But if the stock tries to narrow down the gap, like in terms of TCS, we could actually expect a big short covering for Infosys.
Okay. Since there is TCS and Infosys both, and let's look at first the 3-year chart for Infosys, 3-year chart for TCS, and then we'll nail it down to the 1-year chart also. Now let's identify a trade for our viewers. I've made a case that look, expectations are less. They in a sense have not surprised the market with earning beats. There are more disappointments. They've surprised the market on the way down, not on the way up. So what is a trade in Infosys? This is the 3-year chart for Infosys. It is up only 14%.
Correct.
The stock is weak. Last 1 year return is flat.
Correct.
Which means if news, until and unless news is really bad, I mean, pay bhi zyada cut, then the stock will fall. But if news is little bit good also, the stock could see a bout of short cover.
Correct. So the best trade Nikunj to take is actually post results.
Okay.
So for example, assuming if the stock opens with say a 2% gap up, post results, there is going to be a short, greater round of short covering for Infosys because the IVs were already at a high, which means the trade should be whichever way the stock gaps up. If it's less than 5%, be on that side of the trade.
Okay. Now let's look at the blank page. We'll identify the trades. What would you say is a trade for TCS?
For TCS, I think the skew is more on the positive side.
So buy TCS today and go home tomorrow?
Yes, that could be a better trade for TCS.
Blank screen aa gayi bhai, chalo. This is Infosys, TCS.
It's IT.
पूरा खत्म तो करने दो. Never judge the book by cover. Okay. What is the trade? Is TCS before result a long or a short?
No, I think Infosys post results is a long.
Okay. Buy TCS.
Buy Infosys.
Buy Infosys post and buy TCS
Pre-result.
So Kunal feels that if you want to trade into Infosys, a big move tomorrow is coming. And the big move according to his analysis could be 4 to 5%. It is better to buy Infosys after a gap up start also because directionally where you know it is headed there. Right?
Correct.
So buy Infosys post
results.
even if there is a gap up start.
Even if there is a gap up.
But if you are slightly risk averse, looking at the fact that TCS has a slightly less beta.
Correct.
And it's not going to give you a large swing. A 3 to 4% move in TCS tomorrow should also be anticipated.
Yes.
So go home with a long position in TCS. But if you are looking at a complete comfort trade,
Correct.
go what Infosys post today's
results.
numbers. Thank you, Kunal. That's lovely analysis. I mean, just broken it down so nicely and descriptively.
Correct.
That there is a big trade in IT tomorrow. Infosys and TCS. The swing factor will be at play. But if you want to trade Infosys, buy it after the numbers, even after a gap up or a gap down. But TCS, I guess you can go home with a long position. That is Kunal's recommendations. All right. Let's take a break. But before that, here are some more thoughts from IT specifically. And then we'll also show an excerpt of a conversation with the BSE MD on where he feels that the exchange is headed in terms of the market and in terms of the new age business.
When you look at the industry today, you do have to look at it from 2 different perspectives. One would be the next few quarters that are seasonally weak. And then the second one is assuming we get to a point where the Feds are done raising rates and will start maybe cutting rates, you'll probably see better budgets for calendar 24, i.e. better discretionary spending. And on top of that, you also have to be looking forward for the conversion of the large deal pipeline that was won throughout calendar 23. The issue that we've had, what we heard from companies, is that a lot of those deals are not converting as quickly as expected. So they'll not necessarily be contributing to December, may not contributing to the March quarter, but we'll start seeing some of that contribution falling through the June quarter.
We are doing what we are required to do as in charges of stock exchanges, and the purpose for which we have come, that is to make BSE vibrant with the able guidance of the market and the regulators, and probably the market is finding it okay that we are doing the right thing. That is why the prices are going up. That's the way we look at it.
They say in economics that there is one person who is right to win and the other players, they tend to get marginalized. That really was the big picture opinion when it comes to the Indian stock market exchanges. But you've changed it, you've tweaked it. You've gained the market share back in derivative market. Your distribution platform in a sense is now accounting for almost 20% of your total revenue. Was that a conscious strategy where you wanted to regain the market share back in the derivative market?
It is just not the derivatives market. The strategy was to make BSE vibrant. When we talk about BSE vibrant, people used to ask me, what do you mean by that? To have a meaningful presence in all the areas where we are currently present and we are not being looked at as meaningful. That includes cash, derivatives, currency, debt, SME, everywhere. In SMEs and mutual funds, we were actually having our presence felt a bit. In all the other areas, we are not. So the effort is on all the three areas to make our presence felt. And I feel the market is really big. And I therefore feel it's not a question of only if one person has a right to win, there will be no other people who can coexist. I appreciate what you said, that it is a paradigm which was probably thought about at some point of time. Our idea was to prove that there is more space for people, there is no need for competition. Actually, if you are able to provide a product which is complementing each other, that itself would pave the way for coexistence and continuous growth. Actually, that's what we have proved, I feel, to start with. We have a long way to go, of course.
Queries and more queries, and our first specific query is coming in, and we are looking at Yes Bank actually, where we've got a question coming in from Mr. K. Muthuswamy. 50,000 shares of Yes Bank at 18 rupees since last 3 years. 500 REITs at 520. Should he hold, buy or sell? Bhasin Saab, Yes Bank is a stock where 2 out of 5 queries they end up coming. This is one stock, I guess, everybody in a sense wants direction, because entire banking sector has come up, but Yes Bank is still not really living up to what the promise was after the P investor.
Yeah, good afternoon. So Nikunj, it's clear that it's gone through a big crisis, but the recapitalization is huge. So it has a capitalization of 40,000 crore, and return on equity, return on capital will take time. But it has weathered all the storms. Anybody who got in that 12 rupees when the QIP came and so on, they've doubled their money. However, there are still remnants of people who had bought it at higher levels. And, as you are aware, the government had saved the equity holders, and the A1 bonds became zero. I think Prashant Kumar has done a tremendous job, but return on equity will take more time. So if you are looking at more value, it will take 40, 45, 50 rupees. It will take at least another 1.5 years.
Okay, the second one is REITs. I don't track this one, but Bhasin Saab, what is your view on REITs?
No, see, anything to do with railways is doing extremely well, and I think he should stay put. The advent of the budget and now railways being very, very prominent in government capex, I think REITs could be a good play. So stay with it. I think this could be a relative steady performer over a period of time. It has a good dividend yield, but I think it is still there is room for it to go upside, for it to go higher.
With one more query, and that one essentially is coming for Tata Steel. 5,000 shares of Tata Steel at 110, Borosil 186. This is coming from Mr. Bhatnagar from Delhi NCR region. Thank you, Mr. Bhatnagar, for sending the queries. Now, 5,000 shares of Tata Steel. Is one better off buying Tata Steel or a domestic steel company? That's part one of the question, Bhasin Saab. Second is that should one avoid steel completely given that China is not coming back?
Well, I think if you want to play the market, then the dollar is definitely headed lower. Tata Steel is not the lowest cost producer in India, it's in the world. And if their chorus assets are measured today, after giving a valuation from 40 to 83 on the hedge bit of the pound, they are actually in a very sweet spot because chorus assets are up 3 times. Chorus makes specialized steel, and I think Tata Steel is definitely headed to 175. You can keep a trading stop loss of 125, trading stop profit. But I think if you are looking for slightly long term, then Tata Steel will lead the steel players. I'm very bullish on commodities, particularly ferrous, non-ferrous. The likes of NMDC, NALCO are doing extremely well. But Tata Steel can be a relative outperformer. 175 I see coming in maybe the next 3 to 6 months.
My personal view, Mr. Bhatnagar, I'll take the liberty of differing from Mr. Bhasin here, is that I'm not so sure about the health of the global economy next year. China is yet to come back. US economy, if they're cutting interest rates, that means that they expect slowdown to come through. And if both these factors are not favorable, I don't expect, plus, Russian steel is coming back to the market. So these are factors which in a sense could have an impact on the market per se. So while Mr. Bhasin Saab's argument is completely valid that weak dollar means more strength in commodities, but I think I would be a bit careful in terms of understanding the global demand. If you're buying Tata Steel, it's like a long haul. You may not get instant gratification there. What about Borosil, Bhasin Saab? What is your view there?
Yeah, so see, aside from Asahi Safety Glass, Borosil is a very, very key player in the glass market and it has done well. I would say stay with the stock. This is, a relative outperformer. I still think 500 plus levels can come in Borosil.
Thank you very much for joining us. Thank you for tuning in and thank you for watching the show. I'm Nikunj Dalmia signing off. Keep sending your queries to us. We'll try and accommodate as many as possible. But the trend, I guess, is very clear that for the moment, Indian markets are one step forward, one step back.